Before you actually list your property, it's important to consider your finances. Start with how much your home is worth and check this against your current mortgage. Are you able to pay it off? You'll want to read through your paperwork, seeing whether there are any fees like admin or early repayment fees that you need to factor in. You should also start looking at your savings and working out how much of a deposit you'll need for your next home. Typically, lenders require a minimum of 5 to 10% deposit. A larger deposit will give you a better interest rate on your mortgage, which means lower repayments. You also have stamp duty. Stamp duty is a tax on property purchases and is usually in the range of 7 to 12% of the property price. This is important to calculate into your budget because you cannot add stamp duty to the cost of your mortgage. The stamp duty needs to be paid upfront at the time of completion of the transaction. The good news is, eligible first-time buyers buying homes costing less than £425,000 will pay no stamp duty at all. Number 3, make sure you work on having good credit. The better your credit score, the better mortgage rates you can get. You'll also need to provide evidence of income. This will need to be in the form of 3 to 6 months payslip, so refrain from changing jobs right before you move homes. The lenders will be looking at your bank statements to calculate whether you can afford to pay the mortgage on top of your daily, weekly and monthly expenses. So make sure your income is at least 3 times greater than your expenses before applying for a mortgage. Number 4. Once you've been approved for a mortgage, you'll be awarded with an agreement in principle, which is basically lenders saying they will be willing to give you X amount to buy a property. Some agents may not even let you view a property without having an agreement in principle. Number 5. Finally, you'll need to start considering your budget for conveyancing costs and solicitors' fees and moving costs, which can be in the thousands of pounds, depending on your property. It's a good idea to start setting this money aside now so that you're not caught short later on. So that's an overview of the financial hurdles you'll need to jump through when purchasing a property. Bye for now.
Estate move, bleeding the house hunt revolution.